I'm Jim Cramer, and welcome to my world.
You need to get in the game.
Firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
I always like to say there's a bull market somewhere. And I promise
Mad money. You can't afford to miss it.
So what can we learn here? The best performing IPO this year is a company called Primerica, PRI. Worst performer was Mitel Networks, M-I-T-L. Primerica is the largest term life insurance company in the United States. And it gave you a terrific pop when it came public at 15 on March 31st, opening at $19.15, up 27.7% from the pricing. Thank you, Vikram Pandit, one of our fave CEOs. And it has since gone even higher. Stock currently trading at $22.20. That's up 48%. Thank you, Vikram. So what made Primerica a winner? How could you tell that this IPO would work? Citigroup was the lead underwriter, and they wanted you to win on Primerica. So they priced the deal at extremely attractive levels, and they weren't the least bit greedy. I hope the Treasury Secretary wants the public to win with GM and knows that Gordon Gekko is wrong because greed is bad when it comes to successful IPOs. That's very important. Biggest driver behind Primerica's successful deal. The valuation was just too compelling, with the offering priced at 1x book value, which for insurance companies, basically the cash they have on hand. Most life insurance companies trade at 1.2x book value. Mind you, Tim, while autos aren't cash, you can figure out how to make this stock cheap versus, say, Toyota and Ford on an apples-to-apples value. Even though Citi priced pre-RI well below what other insurers were worth, Primerica is a best-of-breed life insurance company with above-average return on equity, a high-quality investment portfolio, conservative capital levels. So it deserved to be trading at a premium to the group, not a discount. But Vikram Pandit didn't let that happen. He gave you a good deal. Plus, Primerica was just what the market wanted at the time, a profitable, steady business without any financial regulatory problems. Company had a solid balance sheet, lowest investment leverage in the life insurance business. It had 2x investments in cash over common equity, while the average of the group was closer to 7.1x cash over common equity. Now, we like companies that don't have too much leverage, and that's what those others had way too much debt. Now, in getting back to even, which happens to be the ultimate handbook for this volatile market, I can tell you that you have to examine an IPO's bloodlines. That means, among other things, you want a company with good management. Primerica has two strong co-CEOs who've been in position since 1999. That's what we want to see. The deal also had Warburg Pincus good housekeeping seal of approval. Warburg Pincus private equity firm actually invested $240 million in Primerica at the initial public offering. In a lot of IPOs, you see PE players who own a stake in the company selling their shares. And almost invariably, these IPOs are losers. But a private equity firm buying stock at the same time you are, definitive positive.